If you can hear this transmission, you are part of the resistance and you are not alone. We are outnumbered but not outsmarted. We are taking Florida back in the streets, in the air, in the water, and we have infiltrated the airwaves. We know you're tired and looking for a better taste, so you must join the fight. We have the answer. It's in your DNA. DNA energy drink. We are the revolution.
Welcome back.
Our next company today has a lot on their plate because they're entering into the $9 billion energy drink market. And as you know, Red Bull and Monster dominate this sector. DNA Brands is penetrating to this market with a profile that investors are finding increasingly appetizing.
And they're also cutting into the profitable meat snacks market, dominated for years by the likes of Slim Jim and Jack Link products, with ones that they claim are both better tasting and better for you. It's easy to see the culinary and financial appeal that could be there. Well, here to share his bounty of knowledge about this growing brand of products is CEO and founder of DNA Brands, Darren Marks.
Darren, I'm really glad you could make it here today.
Thanks for having me on, guys.
Darren, I got to tell you, you're up against some pretty hefty competitors like Red Bull, that does about $6 billion in revenues, and Monster, that does about $2 billion in revenues. How did you break into this very fast-growing, profitable sector of the beverage industry?
Well, our big break came in 2009, Chris, when Monster Energy left Anheuser-Busch in favor of Coca-Cola, leaving Anheuser-Busch, the entire network, without a viable energy drink. So they formed an SBA committee looking to replace the revenue that they lost in a fast-growing energy drink category. We interviewed, we went through quite a bit of due diligence, and we were awarded the preferred vendor status with Anheuser-Busch. And we've been fortunate enough to say that we've been distributing through most of the Anheuser-Busch network in Florida, and we enjoy a great relationship with them.
I've tried the Monster, and it really doesn't taste that great. I understand that you won an award, actually, for your product as the best-tasting energy drink. Can you tell us about that?
We're very proud of that. Actually, in 2010, the World Beverage Competition in Geneva, Switzerland, held a competition for the best-tasting energy drink. 900 applicants submitted. It's a blind test, so it's not sponsored or paid by the bigger companies. It's a true test of the world's best-tasting energy drink. And I'm proud to say we won that award because of our quality ingredients and our taste. If you would try a citrus, and I know both of you tried it before the show, it tastes like an orange soda. Our lemon lime tastes like a Mountain Dew taste profile. And we have two sugar-free products. We have a sugar-free citrus that tastes like a sugar-free orange soda, and a cran raspberry.
You have a great product. You've got incredible distribution through Anheuser-Busch, but this is a major player out there. I mean, Red Bull they're the biggest. They're the big dogs on the street. I've heard they're even firing some of their distributors to do self-distribution to essentially cut out the middleman and increase their profits. How does this benefit or help you?
It's a huge benefit for us, and you're exactly right. Red Bull is taking back a good majority of their distribution. They've already terminated the top 25 distributors in their biggest markets. They're on their way to doing 50, their top markets, and eventually they're going to be taking over the whole United States. So imagine if you had a Red Bull distributor distributing Red Bull for 13 or 14 years, is now without Red Bull. They grew up in the energy drink business, that's all they know. So it's a great opportunity for us to bring DNA with a proven track record in the state of Florida and other states that we're selling in with Anheuser-Busch as our partner, and getting into the big chains, getting sell-through, and having the ability to bring that to them is a huge benefit for us. When Monster left Anheuser-Busch, it left them with a huge hole in their revenue with the fastest growing segment of the beverage category, the energy drinks. So they're trying to replace that business. So we're with Anheuser-Busch in some areas. We have Red Bull distributors in other. And then the other big opportunity is Miller Coors. As you know, they don't have an energy drink right now. We're in Wisconsin with them. So the three top situations that exist out there for distribution, DNA is positioned very strongly with all three.
All right.
And that's really contributed to a lot of our recent growth.
All right, so these guys got into the business. Red Bull was obviously the first to market, very much like 5 Hour Energy was the first to their market, and they became the biggest and the best. And this is almost impossible to penetrate this market because everybody knows 5 Hour Energy shot. These guys were first to market. They were very well funded, not a great product, but clearly a dominant market leader. Now we also understand you're really developing Florida. Walgreens stores, you're in every single Walgreens store in Florida, and Circle K, and Racetrack, and 7-Eleven. How much more growth is there to happen in Florida?
Well, actually, if you break down the state, we're in about 9.5% of the total distribution that's out there. And we do have every Walgreens in the state of Florida and the liquor stores attached to it. We have every Racetrack and Circle K, and we're in select 7-Elevens. And that's only 9.5 to 10% of the distribution. So we have a long way to go to get our pods, as we call them, points of distribution, up to 75, 80% where we think Monster, or where Anheuser-Busch brought Monster to that level.
Could you have gotten where you are today without winning the World Beverage Competition and without the help of Anheuser-Busch?
I mean, winning that award was a big deal for us because everyone recognizes the World Beverage Competition as a legitimate, honest competition. So we used that on our point of sale, and it was a big selling point with the buyers of the chains. Anheuser-Busch has been our big brother. You know, when you're out in the streets doing battle with the Coke and Pepsis of the world, and they know Anheuser-Busch is distributing DNA, or Red Bull, former Red Bull distributors distributing DNA, or Miller Coors is distributing DNA, they have a tendency to kind of back off a little bit because they don't want to pick a battle with the giants. And not to mention, they have the great ability of getting placement in the stores. They have long, long relationships with these C-store owners, with the chains, and we leverage those relationships.
Tough question. Coca-Cola and Pepsi-Cola had AMP and they had Rockstar. They have not really done well. From my understanding, Coca-Cola has a $25 billion 5-year marketing budget for their products. They've had an energy drink and it really failed. How do you think that you could make this successful, or what have you learned from their failure?
Well, you're exactly right. They have failed miserably. And part of the failure is they go out and do national distribution because they have a model they have to follow. And even though it's Coke or Pepsi, if you put it on the shelf, it doesn't necessarily mean it's going to sell. Again, the slow, methodical growth going into a market, let's take Florida, for example, where we did the action sports first, we built credibility, then we stemmed into the independent trade, built credibility there, got sell-through. The key to this thing is the brand selling. We can open up 15 states in the next 12 months, but I will guarantee you that 60% of it's going to fail because we don't have the manpower or the marketing to support it. So it's a slow growth. So if we go and take one step in front of the other and we build a brand, we are a very relevant brand in Florida right now. When people think energy drinks, it's Red Bull, Monster, and DNA. You know, those are your brands that are out there that are selling at store level. The buyers are bringing us back in the stores. Circle K, we're in our 4th year. Racetrack, our 2nd year. Walgreens, we're going to go into our 2nd year with them. That's the key, is to get sell-through, get the brand to grow organically. Build the brand with your core demographic, and then look to create items that are niches that are different than what's out there. Obviously, having the world's best tasting energy drink, we were able to go out and create a brand that 900 other energy drinks were not able to do.
Well, I know a lot of people would normally drink these for effect, not for taste. So here they can get taste and effect, 2 in 1.
Correct. We often say you can actually have a sandwich with our energy drink.
I recently read, Darren, that you just got approved to be in the largest military commissaries in the United States, and these are APHIS, DECA, Nextom. Is that correct?
That's correct. Yeah, this is a really big deal for us, Chris. We were able to present to DECA and APHIS. Those are the 2 big buying groups for United States military. They cover all the military bases, whether it be commissaries or PXs around the world.
For investors that may be watching, what would you say is the single most important thing that you would like them to leave with today when they think of DNA brands?
Well, I think there's a couple things, but the number one thing for an investor is the opportunity that exists by having Coke distributing Monster and owning Full Throttle, and then Pepsi, of course, distributing Rockstar and owning AMP. And now, as I mentioned earlier in the show, Red Bull terminating a top 50 and soon to be the entire United States. There is a huge opportunity for a company like DNA. If we can stay disciplined, Patricia, and focus on these markets and continue to get the growth and the sell-through that we can build a national program with a mixture of Miller Coors, Budweiser, and former Red Bull distributors. So that's the opportunity, and I think our discipline, our marketing, and it's not just a one-shot answer, unfortunately. It's a combination of many things, but that's the real opportunity there. We have a lot of the guys that worked for Red Bull when they brought Red Bull over, when they couldn't give away a Red Bull. You know, to think about this. Yeah. They couldn't give it away. $2 item, tasted like medicine, quite frankly. They couldn't give it away. Now it's a $6 billion a year business that they've created, just Red Bull alone. Monster was $4 a share, Hansen's, and it went to $2.40 the equivalent. Okay, by building market share. There is definitely...
$240 as in $240.
$240.
And it's split adjusted, now it's 85.
Right, and there's been many splits and so forth. I mean, I wouldn't know the exact dates on those splits, but I know it's split quite a bit. The opportunity for a small company like us to come out and take down $100 or $200 million of a $9 billion a year category with the help of Anheuser-Busch, Miller Coors.
You're not asking for much.
We're not asking for much, and it's very doable. But again, it's going to take one step at a time. We are raising money right now. We do, as I mentioned to Patricia earlier, have the opportunity to grow the brand. We've had a lot of calls from a lot of distributors. A lot of chains want to do business with us because of the success that we've had. So we would raise money, see what we would need, and then go out and execute on that.
Or if someone else bigger, like a Red Bull or a Monster, they could just buy you and you could disappear, or they could roll you into their own brand as a new flavor.
Absolutely. We've been approached by a couple investment banking firms that have gotten due diligence packages on us to kind of keep an eye on us. We're not quite at that point where I think they're ready to come in with something that we would be happy with. You know, we're about building shareholder value right now. We want to see our stock go much, much higher than where it is currently, and we think we can do that. But there's no question, as we grow, we will be a very attractive takeover for a company that wants to expand their line or wants to be in the energy category for a first time, because they're not going to be able to create a brand. Most companies can't, but they'll buy them and then put the money behind it and then grow it nationally.
The heavy lifting's already been done.
Correct.
Well, Darren, thank you so much for being on the program today.
Thank you for having me, and I appreciate you letting me speak about DNA brands.
My pleasure.